Ladies and gentlemen, good day and welcome to the Q4 FY'24 earnings conference call of Gateway Distriparks Limited and Snowman Logistics Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Today on the call we have Mr. Prem Kishan Das Gupta, Chairman and Managing Director, Mr. Ishan Gupta, Joint Managing Director, Mr. Samvid Gupta, Joint Managing Director, Mr. Sikandar Yadav, CFO, Gateway Distriparks Limited, Mr. Rajguru Behgal, President, Rail, Gateway Distriparks Limited, Mr. Manoj Singh, President, CFS, Gateway Distriparks Limited, Mr. Sunil Nair, CEO and Director, Snowman Logistics Limited, Mr. N. Balakrishna, CFO, Snowman Logistics Limited. I now hand the conference over to Mr. Prem Kishan Das Gupta for the opening remarks. Thank you, and over to you, sir.
Thank you. Good afternoon, ladies and gentlemen, and thank you for joining us for our earnings call for Gateway Distriparks Limited and Snowman Logistics Limited for the quarter and year ended 31st March 2024. I hope that you have had the opportunity to review our financial statements and investor presentation, which have been made available on the exchanges and on our website. We'll be happy to address any questions or queries that you have, and any clarification on any particular issue will be addressed. With this, I hand over to the moderator for the Q&A session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We will wait for a moment while the question queue assembles. Our first question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, hi. Good evening, everyone, and thanks for taking my questions. A couple of questions. The first one is on Red Sea issues. How do we see it shaping up in the next quarter and possibly the year? And what was the impact on our business in Q4? That is the first question. And the second question is that if you can highlight the capex for next year and the broad areas where it would be done.
So the Red Sea impact was there, especially on the rail side. We saw a big dip because the Red Sea crisis led to increase in freight rates and low value commodities bookings went down. So primarily on account of waste paper and scrap, which we were doing a lot in Ludhiana and Kashipur. So we had an impact, and you can see that in the throughput of the rail numbers. CFS was more or less flat on account of Red Sea. It's still continuing a bit as we go into Q1, but still there is an uptick that we are seeing. So primarily the worst of it is past us. On the capex guidance, it remains the same as the past, that we are still looking for 2 new terminals. Once those are finalized, we'll let you know. There's no update on that as such. And with general maintenance capex would be about 20 crores for the next year.
Okay, that is helpful. Thanks. I'll come back in the queue.
Thank you.
Thank you. The next question is from the line of Mr. Achal Lohade from JM Financial. Please go ahead.
Yeah, good afternoon. Thank you for the opportunity. I wanted to check on if you could spell out the market share, what we had in fourth quarter as well as for the full year in the NCR and the Ludhiana market.
Yeah. So at NCR, we maintained our market share of 60%, and in Ludhiana, we maintained a market share of 22%, and at Uttarakhand, so our market share was 27% in Q4.
And if you could help me with the base number, this is for fourth quarter. How was it in fourth quarter FY'23?
So if we look at FY'23, so there is a growth of in NCR. If we talk about the two terminals, so we experienced a growth of 5.5% in Garhi and Pyala. And if you talk about Ludhiana, so there was a dip in overall volumes due to, as Samvid mentioned, due to Red Sea crisis, because there is a lot of import of scrap and waste paper coming. So there was a degrowth of minus 30%, but that was primarily on account of imports. At Kashipur, there was a dip of minus 19% over Q4. But if we see the overall YOY volumes, so we experienced a growth of around 8% in Kashipur volumes.
Just to clarify, the NCR market share has stayed same between last year and this year. In Ludhiana, our market share went down from about 30% to 22%, and this was primarily on account of the fifth ICD coming in the region. But we're still tied for the market leader in Ludhiana. Hello.
The line for the current questioner has dropped from the queue. So we'll move on to the next question. The next question is from the line of Krupa Shankar NJ from Avendus Spark. Please go ahead.
Good evening and thank you for the opportunity. My first question is on, could you share your EBITDA per TEU for the rail business and the CFS business?
Yeah. So our rail EBITDA is about 9,800 to 9,900 for the quarter. For the year, it comes to an average of just below 9,500. For CFS, we took some one-offs in this last quarter. So if we exclude that, it's about 1,300 for the quarter and slightly above 1,500 for the full financial year.
Got it. So when we note relating to the Jaipur ICD, there are specific challenges which have emerged and audit qualification also has been put across. Just wondering, what are we doing with respect to resolving, or is there any significant delay which one can anticipate in the Jaipur facility? Can you throw some light on that, please?
So we had announced this last quarter itself. It was there in our notes. So it's the same matter going on with no fresh update as such. The file has moved from Jaipur to Delhi and it's in progress. It's a legal process that we have to go through, but we're confident of a favorable order. And we had already announced last quarter that we'll only be operational in the next financial year in Jaipur. So that remains on track.
Okay. Last question from my side. On CFS business, we have seen a significant deterioration as such. Have things stabilized overall in the CFS business, or are we seeing further competitive intensity in the space, which can have a detrimental effect on the EBITDA per TEU?
Manoj, are you on call? Okay. Yeah,
I am on call.
Oh, okay. Can you just give some light on the CFS numbers?
Yes. So on the CFS side, the competitive intensity remains and is expected to remain in the foreseeable future. the headwinds as far as increasing top line remain because of the competitive intensity. So we are looking at cost, how we can control costs, and in the foreseeable future, it will remain. So.
Got it. So 1,300 EBITDA per TU should be the new normal. What one should.
1,300 was on account of some one-offs, so closer to 1,500.
Okay. Understood. Sorry, if I may. Sure. If I may ask. Sorry, go ahead, please.
Krishnapatnam CFS, we have applied for denotification as container volumes are stopped there. So there's some one-offs expected in the coming quarter for that as well. But like Manoj said, 1,500 is what we are targeting for the rest of the year.
Understood. If I may, one more question from my side is on the rail side of things. How do you envisage growth in FY'25, 26 on the rail business? I know you are scouting for new terminals, but based on the existing operations, what sort of a growth rate are you looking for?
Yeah, we're still looking at double-digit growth. So we have to see, but we are seeing a volume uptick and expect that trend to continue going forward into next quarter. Like Q2 should be better than Q1, and even the pipeline ahead of that is also strong.
Just to add to that, some of the dips which we are seeing right now are more because of geopolitical issues. And structurally in this industry, we are very confident that there will be growth in manufacturing and in exit volumes. That's why we have this outlook.
Okay, fair enough. So, but are you not seeing any incremental volume growth because of road to rail shift, given that even Varnama has been or till Vadodara, the DFC is operational. So JNPT-led volumes, perhaps you can bring it on a double stack from Gari to Viramgam, and then JNPT can be catered. Are you seeing any incremental volume growth coming in because of this?
We are already doing that from Gari to Viramgam and then Nhava Sheva. But unless the entire section is double stack or the double stack on the entire line up to New Bombay or wherever it ends, then that benefit will not be available in full from JNPT. Mundra and Pipavav are already double stack 100%. 100% in the sense the capacity is there. Volume on our gateway rail business depends on the double stack depends on the volumes. So I think it's all linked to when the DFC is 100% connected on the entire network.
Understood, sir. Thank you for answering my questions.
Thank you. The next question is from the line of Nihal Shah from Prudent Broking. Please go ahead.
Am I audible?
Yes, sir, you're audible. Please go ahead.
Yeah. Thank you. Thank you for the opportunity. So, my first question is in the terms of realization. So, have you seen an uptick in realization of the train throughputs, because our volumes have gone down by 7.5%, but the revenue has stayed flattish? And if yes, then what are our expectations for the rail charges as well going forward?
Yeah, so it's increased year on year basically because of the busy season surcharge. But if you more look at, we focus more on EBITDA per TU. The revenue per TU is more a function of what railways charges, and we pad our margin on top and do that. Other than that, we've not had any revisions to our handling or road transport. So that trend will continue. But EBITDA per TU, as more sections get double stacked, especially Faridabad, which should happen, railways is constantly doing work on that. That will help push our margins up.
One thing I would mention here is that going forward, the revenue and the expenses, will be accounted for differently as per the auditors. So the revenue net of discounts or incentives will be treated as revenue, and there will be no separate column for other expenses or discounts and incentives. So even though the growth might be there, the numbers at the revenue level might look muted, but it will have no impact on the EBITDA or any P&L account.
Yeah, this is primarily on the CFS side. There will be a change in accounting standard from next quarter.
Okay. And another question was that what are the volume growth that we're expanding for the ICDs as we are only going at around 60% of capacity? So, and what was the number of TUs that we handled in this year, FY'24?
So we handled all India basis, rail 3.68 lakh TUs. The CFS side, it was 3.62 lakh TUs, so it was 7.3 lakhs overall. So we have enough capacity, especially on the ICD side, we can go 4 times of our volume. So as and when we hit 70-80% utilization, we just have to expand the container yard, which is a very nominal incremental cost, and we keep doing that year on year. So capacity won't be a constraint at any of our ICD locations.
Okay, and just one last question, like what is the total number of TUs on an average that we carry per train? So like we have around 90 TUs per train that can be handled, and like obviously by double stacking we can get it to 180. So by that we'll also get an idea of how much double stacking is possible, is happening right now.
Last quarter we handled about 950 per train per month, but in the past we have hit 1100 as well. But we've also increased our rail capacity by 3 more trains now, and instead of 180, these can carry 192 TUs on a fully double stack basis. So our capacity also on the rail side has gone up, and we won't see any constraints there. So as and when the volumes import, export pick up, we'll be more than capable to handle it.
And in the last quarter, the double stacking dipped by about 5%. So even though the volume, from 40 to 35%.
Okay.
So that is the main reason for the profitability of the revenue going down. So whenever the volumes pick up, our double stacking will go up, and it is also pertinent to mention that Faridabad terminal will be double stacked soon. Some works by the railways are going on, and we expect that to happen in the next 3-4 months.
So like from the current levels of 35, how much do we expect it to go up to for double stacking in FY'25 or FY'26?
So once it goes all the way to JNPT and Faridabad also adds up, we want to go closer to 45 to 50%, which in the past we've done about 43-44% as our highest. So we are more than capable of doing that. But it all depends on the volume mix and overall import-export imbalance.
Okay, thank you. Thank you very much.
Right.
Thank you. The next question is from the line of Mr. Achal Lohade from JM Financial. Please go ahead.
Yeah, sorry, I got disconnected. Could you please repeat if, in terms of the market share, I understood for the fourth quarter you had mentioned about the market share. If you could talk about the full year market share, please.
Basically, NCR, we are still at 16 to 17%. So year on year, that's not changed that much. The overall volumes have gone up, but even NCR market has gone up. In Ludhiana, with the 5th ICD that came in, our market share went down, but we're still tied for the lead over there. And Uttarakhand, where we've increased it nominally year on year, our market share. Primarily because Q4 was weak in waste paper imports. If that was there, then our growth in market share would have also been much higher for that reason.
Understood. Secondly, with respect to the Faridabad connection on DFC, how does it change for us in terms of, in terms of the offering, in terms of the pricing, etc.? If you could give some more clarity.
Yeah, so we can then do double stack directly from Faridabad rather than right now we are doing it via Gadi. So we'll be in a position to offer more discounts to customers, especially which are slightly further away from our catchment areas, and those become a bit more viable to us. Um, So that's the main advantage that we have.
Is it possible to get some utilization number for our ICDs, for each of the ICDs?
Most of them, like, Gadi would be closer, Gadi and Ludhiana would be closer to 70%. Faridabad, Kashipur, Viramgam, we have enough capacity right now. We'd be probably closer to about 50%. But we have more than enough land bank at all these locations to handle enough capacity up to 4 times the current volume we're doing.
Understood. And just one more question, if I may. How do we look at the margins for both, for CFS you have mentioned, but what about the ICD business, rail business? What kind of margins one would look at for FY'25?
So we ended with 9,500 for this financial year, so I think that's a good range. It will fluctuate a little bit up and down depending on quarter on the imbalance and volume mix, but this is a good range to be at.
Understood. And if you could remind us, with respect to Ludhiana terminal, the last we spoke, a fair amount of competition and discounting. Has that seen some reduction, or it's as intense, or it's getting worse?
It continues, so it's the same trend as last few quarters.
Understood. And just a port mix, if you could, in terms of Mundra, Pipavav, and JNPT. How much of the volume goes to Mundra, how much goes to Pipavav, and how much to JNPT?
Mundra 60%, Pipavav 35%, and JNPT 5 to 7%.
Understood. Thank you so much. I will fall back in the queue. Thank you.
Thank you. The next question is from the line of Bhumika Nair from DAM Capital. Please go ahead.
Yeah. Hi, sir. So we were looking at kind of monetizing some of this, CFS land. Any kind of progress on that aspect of any of the land being kind of monetized?
Yeah. So we just finalized it in yesterday's board meeting. Basically, some land of Krishnapatnam we're monetizing. So there'll be about 20 crores inflow coming in from there. We are looking at some other monetization also, especially Krishnapatnam and Cochin land also that we've talked about in the past. So we are in discussions with some parties, and we'll keep you updated as more happens. And that 20 crore plan, basically, it was a 1 lakh square feet warehouse, and Snowman Logistics will be taking it and converting it into cold storage. So it works out for both companies where Krishnapatnam is a high demand location for seafood, and they get a ready-made warehouse which won't take long to convert, and it has their revenues and margins. And for Gateway, general warehousing was anyway an excess activity over there. So it's beneficial for both companies.
Okay. So this 3 crores that you're selling is external or to Snowman? I didn't quite get that.
No, it's Snowman. 20 crores of basically 7 acres plus some warehousing. Actually, there was additional also through the year, 2 more acres, so that was also part of it. So the GDL will be left with about 34, 35 acres in Krishnapatnam. When originally it had started, it was at about 48, 49 acres.
Okay, got it. Secondly, with this Jaipur terminal getting a little delayed in terms of getting all the approvals and thereby starting work on it, what is the progress in terms of other terminals that we were looking at? Are we kind of fast-tracking that? Are we likely to see another terminal, being identified and getting operational anytime soon? If you can just talk a little bit about that from a more medium to long-term perspective.
Yeah. Moving regarding Jaipur, we are going with some alternate plans, whether a road linked CFS, which is the CRT is just across the land that we have. where the land where we do not have issues. I'm talking about that piece of land. And alternatively, we are working a plan if we can buy some more land and if the rail line is possible, then that ICT can be done straight away rather than in CFS. So it is delayed, but we had anticipated that because of this litigation going on the Jaipur land, a part of it. So it will be operational in FY'26, and we will be taking a call very soon on whether to go for the CFS or straight away buy some more land and go for the ICT.
And regarding other projects, we're still actively looking, but nothing finalized yet. Land acquisition is a bit of a challenge, and so we are actively looking. Hopefully, we can update you within the next quarter or two on this.
Sure. Understood. So nothing basically in advanced stages or anything where we're looking at. So per se, at least in FY'25, there'll be no additional ICD which will likely come up.
The ICD might not come up, but we might buy some land. We have looked at various opportunities of expanding in UP or even in other side of the NCR in Haryana. The only problem is that the land parcels and the logistics policy which have come in some place, but it is being changed, and we hope that some relief, like 60 feet wide road and all that, and minimum earlier like it was 50 acres in Haryana, now it has been reduced to 25 acres. And during this election period, nothing much was happening on that front. So we expect that within this year we will buy the land, but of course, it takes a while to make it operational, 1.5 to 2 years from the date of acquisition of land.
Right. The other thing was obviously the imbalance kind of hurted our rail EBITDA value this quarter. How are things kind of looking ahead into 1Q, and also the outlook that you're seeing from various shipping lines in terms of an improvement? And what was the double stacking index for the full year of FY'24?
So imbalance for the full year was 43% export, 57 import. Double stacking, we went down from 40 to 35%, but the first 3 quarters were all about 40%. So it's anywhere around 38, 39% for the full year on double stacking. Going forward, we don't really have a clear trend. Shipping lines also aren't committing to what the mix will be like, but maybe a slight improvement will happen more in favor of exports.
Okay. So, no material improvement into 1Q, and then we need to look out for beyond that, right?
So in Q1, probably we expect double stacking to be better than Q4. Even the imbalance, maybe not what it was earlier, 60-40, it'll be slightly better than that.
Okay. Great. This helps for now. Thanks so much. Thank you. Wish you all the best.
Thank you, Bhumika.
Thank you. The next question is from the line of Ritik Varidia from Eartha India. Please go ahead.
Yeah, good afternoon. Am I audible?
Yes, sir. Please go ahead.
So I have a couple of questions regarding Snowman Logistics. So my first question is, what are the operating margins for owned versus built-to-suit warehouses?
Can you please repeat your question?
Hello?
Yeah. My question is, what are the operating margins for owned versus built-to-suit warehouses?
I'll take this question. In case of own warehouse, I'll talk about EBITDA. We are somewhere around 55% EBITDA if the land is owned, and if the land is leased, then it is around 35-36% EBITDA. When we do a BTS,
kind of operations where the land as well as the infrastructure is completely owned by the landlord and we rent out the complete warehouse, then the EBITDA is somewhere around 14-15%.
14%-15%, understood. And my next question is, what is the rent as a percentage of revenue for build-to-suit warehouses? And also, is the rent only cost difference between the two warehousing models?
Percentage, I will have to check on that. I don't have handy. But in case of the difference, yes, the rent is the main difference in the whole thing.
Understood. My next question is, what is the reason behind the drop in the margin in transportation services from approx 7.32% in FY'23 to 3.15% in FY'24? Also, could you please elaborate on the subdued growth of 5.8% growth in this segment for the year?
In case of transportation, our EBITDA margins have gone up as compared to last year.
Revenue growth. I'm talking about revenue.
Revenue has gone up by 6% in transportation.
Yeah. And also, like, what is the reason behind the subdued growth of 5.8% in the transportation segment for the year?
Yeah. So it is basically because some of the trucks that we had attached under Snowlink business model, it was from one of the large operators in the country who have decided to wind up their business. So those many trucks were out of the circulation or usage by us. So it took time for us to replace them, which is done now. So that has affected our overall revenue from a market vehicle point of view.
Also, can you just give me a margins for transportation services for this year and FY'23?
Sorry, your voice is not very clear to me.
Am I audible?
You are audible, but not very clear.
All right.
You are saying margin?
For margins in transportation services for FY'23 and FY'24.
So we look at the EBITDA margin, and our EBITDA margin in case of FY'23 was 7.1%, and in FY'24 it is 8.5%.
All right. And my one more question is regarding Snowman order management system. I want to know how does it work, and is it a value-added service like Snowlink, or is it an internal software used by Snowman to increase operation efficiency?
So it is both. So it increases a lot of efficiency for us because today most of the orders comes to us over email and we make the data entry in our ERP system. With this SOMS, the app is with the customer and customer can directly enter order. In that case, we can save on the people spend that we do for data entry operations. So this will bring in a lot of efficiency for us. At the same time, the app is made in such a way that the customer will have a visibility of our fill rate and their order status, which today is a communication through mail or phone calls. So the customer also gets benefited. Over a period of time, we expect that the cost of this whole system is, compensated or paid by the customer in terms of subscriptions.
Understood. And my last question is, when can we expect the Kolkata and Lucknow warehouse to commission?
So Lucknow will be up and ready for use in July, and Kolkata will be in September.
All right. That's all. Thank you for the answers.
Thank you.
Thank you. The next question is from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Yeah, thank you for the opportunity. First, that was linked to one of your peers suggesting that Ahmedabad would be changed to a Gati Shakti terminal. I wanted to get a sense from you whether that presents to us an opportunity to be using that terminal and whether you'd be interested in doing so.
Yeah, so your voice was breaking a bit, but were you basically asking about TKD becoming a Gati Shakti terminal?
that is true, and whether that is an opportunity for other players to shift.
Yeah. So basically on the rail side, on the Gati Shakti terminal, it becomes a common user terminal. If they swap into the new policy of the lower land licensing fee rate, the handling side remains with the terminal owner or operator. So we have to wait and watch to see what actually happens, then we can only comment on it.
Understood. The second question that I had was more on your double stacking quotient, which has been declining over time. Could you give us a sense whether this is because of things outside our control, or can we do something to get back up?
So it was pretty stable between, say, 42%. It's this quarter that it's declined, and that's mainly on account of the Red Sea crisis that happened. There was irregularity of volume. We had to run some empty trains, one-directional trains. So there was higher underframe, thus resulting into lower double stacking. Like for example, suddenly there was a discharge of a few thousand containers at Mundra port. So we had to run some trains there to avoid port ground rent. So it was a bit of a commercial call as well. But we expect it to go back to the standard 40% within the next 2 quarters.
Understood. And this should have a bearing on our EBITDA per TEU, right? As in, we still saw through flattish guidance for next year. If this double stacking quotient was to increase, would it not have an impact on our profitability?
It would. So we would expect that to be higher. It could have possibly gone above 10,000 per TEU in this quarter. But we do expect some discounting to increase going forward as competition picks up, especially in Ludhiana and Kashipur belt. So we're factoring that in and keeping it conservative at 9,500. Plus, there are annual increments and costs also, manpower, labor, other vendors also increase their costs. So we're factoring in those as well when we're saying 9,500.
So the other question that I had was more on the modal coefficient of key ports, and then not having change even though DFC has been commissioned. I'm talking Mundra and Pipavav. If this aligns with your expectations so far, what more needs to happen for those coefficients to start rising over time?
Sorry, your voice again was a bit unclear. Is it about modal shift from road to rail, you were saying?
Sorry to interrupt. Aditya sir, if you're using the speaker mode, may we request to use the handset to ask a question, please?
I'm on the handset. Is it any better right now or still the same problem?
No problem, sir. Please go ahead.
Yes. I think you got the question right. This was so the modal coefficient of Pipavav and Mundra has not changed meaningfully last 5 years, while the DFC has been commissioned in the past 2 years or so. Wanted to get a sense whether this was on expected lines, the way it has moved so far, because we are meaningfully exposed to these port terminals. And what needs to change for these numbers to start kind of going up?
Yeah. So basically, since the start of 2020, they started, trials for Mundra, Pipavav, and DFC, and it's been there since then. So there was a big shift at that time, especially during both the lockdowns that happened and dependency on rail increase. But since then, it's been a very slow, gradual shift. So primarily where the markets we operate are long distance, and 80% is probably already on rail. Some of it, which is time-sensitive cargo, refrigerated cargo, LCL cargo, that still goes by road and continues to do so. Because a lot of it goes to JNPT. Once JNPT goes to double stack, becomes connected to DFC, and double stack also will naturally come as part of that. We expect some road to rail shift from that area to happen. But for Mundra, Pipavav, it's largely happened already.
Okay. Now, maybe get your view on this one. This is the last question. As in, DFC has ended up creating a lot more capacity out of the same capacity while giving you no great volume growth. In some ways, has it been detrimental from a margin perspective so far, at least? Because obviously you run things faster, which obviously means a lot more capacity is now available, right? And the pricing starts kind of
Yeah. Sorry, not able to understand. Your voice is coming very.
I'm sorry, I'll try once more. If it is still a problem, I'll probably get back into the queue. Am I audible to you right now?
Sir, please go ahead. Yes.
Yeah. And what I'm trying to say is that isn't DSP having a margin dilutive effect by kind of creating a lot more supply because things happen faster? Okay. And why not giving you adequate volumes to kind of use that supply to actually start paying now? Has it had a detrimental effect on the kind of so far? Because we can't see double-stacking quotient having gone up. We can't see multimodal the quotient going up. But obviously we do see faster transit times.
Sorry, yeah, we're only catching like few words here and there. It's coming up. But maybe let's connect offline and we can kind of just, I will take your question there.
Thank you. Thank you.
Thank you. Sorry. Thank you.
Thank you so much. Participants, if you wish to register for questions, please press star and 1 on your touchtone phone. Our next question is from the line of Pranay Khandelwal from Alpha Invesco. Please go ahead.
Hi, thank you for the opportunity. I wanted to congratulate Snowman on being the 14th largest cold chain company in the world. And wanted to ask a question on the revenue share from the different segments. For the past 3-4 years, we have seen that QSR and dairy revenues have increased, but meat and poultry segment is not doing well. Any comment on that? Hello.
Sorry, I was on mute. So, yes, so dairy and ice cream has been, the industry itself has been growing good 20% plus CAGR last 3 years, so their contribution has increased. And in terms of meat, most of the meat exports have moved into a rail logistics operations. And strategically also we are putting less focus on meat as a segment. So that is the main reason. Only in selected locations we have meat storage now, and we are trying to replace that from other better yield segments. That's the main reason.
Okay. But so seafood must be a high yielding segment, right? And being on the ports, I believe a lot of our capacities are near ports. So even there we are not seeing much traction.
No, so since we have not added much facilities in the coastal areas in the recent past, and most of those facilities are fully utilized, so the growth is stagnant as of now. With the new plans that we have in terms of building one in Krishnapatnam and one in Bhubaneswar, the contribution will start increasing. It's only because of capacity that we don't have. Seafood is growing there.
Okay. I believe Krishnapatnam and Bhubaneswar haven't yet been started, right? Like currently on the pipeline is Kolkata and Lucknow. What's the color on that? When shall we expect that? And then to come on, since I think the guidance for the FY'25 is that we'll have 2 lakh pellet capacity. So, comment on that.
So Lucknow is under construction and will be functional in July. Kolkata will be functional in September. In case of Krishnapatnam and Bhubaneswar, we already have one facility in each location, and therefore we are going for further expansion in these 2 locations.
Okay. And will that be completed within this year?
In Krishnapatnam, yes. Bhubaneswar, no. It will go into FY'26.
Okay. Also, can you give an outlook from the 5PL business? How are things looking over there, since it looks like the revenue has been muted, like the growth in revenue? So anything on that? Any new customers? Anything? Any new developments?
No, if you see, last year we did 83 crores of business, whereas this year we did 131 crores. So it is not muted. Maybe last quarter versus this quarter it could be a little, but overall we will see.
Quarter.
Okay. So this is a very promising segment. In fact, we are expecting major growth in our long-term vision coming out of this segment. So it is promising. This quarter at least a too shorter period for this particular vertical to show growth in numbers.
Okay. And no new customer as of now, right?
There is a customer, as I told you last time, and there are more addition of products. So it's not typically customer addition, it is usually addition of products that results into higher revenues in this particular.
Okay. And can you also quickly comment on this deferred tax reversal thing? Just explain it in brief, what has happened over here.
Samit, you would like to comment?
Yes, so you were asking about the effective tax rate for last year?
No, for Snowman, for the last quarter, we have seen that there's an increase in the deferred tax.
Yeah. So, this was basically, the recommendation of our statutory auditor, that we did a one-time reversal of.
Yeah, we assessed and this was one-time reversal for the 8 years of 3580, where there is a difference of opinion between the tax authorities and the company. So, as amendment precaution, we have taken that it is not a cash outflow. It is just a decrease in the deferred tax asset.
Okay. All right. Yeah, that'll be all. Thank you.
Thank you. The next question is from the line of Jainam Shah from Equirus Securities Private Limited. Please go ahead.
Yeah, hi, am I audible?
Yes, sir. Please go ahead.
Yeah, thanks for the opportunity. So this question relates to the Gateway Distriparks. So we just wanted to have a number from your side. What could be the market share for ours at the JNPT port? You have given the number of our volume share in at the JNPT, but what could be the market share of ours at JNPT in total volumes?
We don't take the data on port-wise, but it would be very negligible since we don't only 5% of our business is for JNPT, and JNPT caters more to UP, MP, Karnataka, the South and Central India part, basically, where we don't operate.
Okay. So basically, if we see after 1 year, JNPT is connected to the DFCT. Our share is very nominal and our total volume share is at 5-7%. It has been the range over the last few years. So what kind of benefit will be having in the total volumes? Can you assume that whatever could be the DFC benefit has already flowed in for us and maybe some gradual increase could be there, but nothing kind of a V-shape or direct recovery could be there because of just JNPT getting connected?
Yeah, sorry, the voice was echoing, but I think I got the gist of the question. Basically, right now it's a low percentage, but post DFC connection, we could possibly see a shift in the port allocation by the shipping line. So JNPT volumes could possibly go up. Historically, JNPT, Mundra, Pipavav used to be equally split for the north business. But then because of distance and time, it shifted more towards Mundra and Pipavav. A lot of shipping lines anyway call on JNPT, so they would prefer one discharge for both north and the local volume. So we have to wait and watch how it happens. One advantage that we'll have is that we have a pan-India license and not all CTOs have a pan-India license. So we would be gaining more of the JNPT volumes meant for the north compared to the other CTOs that are there right now. Plus adding in with our hubbing at Viramgam, we can have an advantage in terms of imbalance routing and hub and spoke for distribution across different terminals from there itself.
Okay. Got it. So other question is related to the ICD addition that we have been talking about. So, I guess we have been talking about this since last 1 year. So is it because are we not seeing that much volume that our internal rate of return or maybe land value might not be coming in because of that we are delaying the acquisition, or is it we are not able to finalize the location? So any specific reason for the maybe delay or maybe some time that has been taken to add on the ICD since last 1 year, as we are having the cash balance and we are already generating the cash, so to deploy it somewhere in the business?
Yeah, no, so it's more availability issue. We have to, there are a lot of constraints in finding the right location for ICD. You have to be near a railway station, ideally within a kilometer. You have to have good road access. You have to be near the business hub, normally a manufacturing hub. You need 1 kilometer length along the railway station to allow you to get the rail siding inside. And then all of this in contiguous piece at a good rate. So with all those factors, it narrows down the available options by quite a bit. So we are actively pursuing this, and you should probably see something happen within this financial year. But yeah, it is a work in progress.
Got it. And so just last final question from the financial side, are these defects that we are having benefit of this in the gateway? So till what time will be having this tax rate benefit? Of course, we are paying in cash, but on the reported basis, at what time, by what time this benefit will be going out? It was somewhere around FY'27 or something, right?
So currently, we have been paying taxes under MAT, which is 17.47%. Because of ATI benefit. There are 2 more locations where we have pending ATI benefit, which will continue for one location up to FY'27, and another location till FY'28. So after that, we'll have the benefit. So maybe, if the company's profit goes the way we are going, and if there is a growth, then definitely, this benefit will get reversed. Or the deferred tax adjustment will happen in the next.
Okay. Basically, we'll be using the MAT credit that we generate till FY'27 and 28. By FY'32 is our projection. So till then, effectively, we're paying MAT but getting the MAT credit. Right now, our effective tax rate is about 2%. Next year, one location is going away, so it might go up to 5-6%. And then 27 is when the full tax rate then will start becoming applicable, but we'll use the MAT credit for the 4 years after that.
Got it. That is very useful, sir. Thank you so much. That's it from my side. Thank you, sir.
Thank you. The next question is from the line of Kundenia Nimmagadda from Jefferies. Please go ahead.
Hello. Yeah, hi, sir. Thanks for the opportunity. Couple of questions. First one, I think in line with it unclear when you spoke of at the beginning of the call. So just trying to understand what is the current situation on the Red Sea crisis? Have the volumes bottomed out in your view in 1Q, or do you see the issue sustaining for a couple of more quarters? If you can help us understand that a bit better, please.
Yeah. So what has happened is that orders have started flowing in. But now there is a problem with the port congestion because a lot of the vessels, they are taking the longer route via Cape of Good Hope. So their rotation is affected, and some of the hub ports like Singapore and also there is a port congestion also which is happening. So though the cargo bookings are there, we have seen a minor uptick. But again, it is too early to predict or say that everything will be back to normal. We need to wait and watch maybe another 1 or 2 months till the volumes start coming in. So if you see the containers are there from the origin to the destination ports, but again it is taking longer time. So the arrivals are getting impacted. But there has been spurts wherein 1 week we see very good arrivals at the port. Then again the next week, again there is a lull. Again there is a rise. So there is no consistency as of now. So we have to wait and watch.
Understood, sir. And sir, my second question is on the potential benefit if JNPT gets connected. To answer to one of the previous questions, we did allude to the fact that shipping lines may shift from some of their volumes to JNPT. That's fine, but if I were to measure our performance from ICDs in hinterland, 80% of those volumes we are already catered. I mean, we are already double stacking those volumes, right? So maybe you may have some benefits on ton kilometer basis, but on a sustainable basis, where do you see potential benefit with that? I mean, how do you see market share gain or some kind of benefit from the JNPT connectivity? If you can help me understand it a bit better, please.
Yes. Basically, out of the 12 to 15 container train operators, only about 4-5 have the JNPT license. So we are one of them. That's why we should see an increase in market share if volumes tend to shift more towards the JNPT side. It will be more a pricing benefit, costing benefit with double stacking coming in, and turnaround time also improving. Right now, it takes up to anywhere up to 72 to 90 hours for JNPT. That will come down to 24 hours. So we'll be able to utilize our fleet better. So that's another operational advantage. And there's a lot of cargo, like we mentioned earlier, which is time-sensitive, consolidation cargo, LCL cargo, refrigerated cargo that we can start targeting once JNPT leg is complete. Those are the main benefits that we see.
Understood, sir. Thank you very much and all the best.
Right.
Thank you. The next question is from the line of Sai Siddhartha Pasukuleti from Kotak Securities. Please go ahead.
Hello, am I audible, sir?
Yes, sir. Please go ahead.
Yeah. Thanks for the opportunity. So I just wanted to follow up on the question of my colleague, Aditya. So basically, has DFC been margin dilutive on our operations, given that it has increased supply in the country while not giving much volumes due to any modal share changes not happening? Or has it not improved the double stack coefficient for us on the same lines?
So it has increased our margin actually because we've increased our double stacking. Like earlier, there were certain routes where we couldn't double stack. Say Viramgam to Mundra was not one of them, but now we can have all our volumes from north to Viramgam to Mundra and get the double stack benefit. Similarly, Faridabad getting double stack will also add an improvement in margin. It also helps lower the cost of logistics for the end consumer. So we do pass on some benefits of the DFC, but we don't have special pricing for DFC or double stacking versus non-double stack routes. So we try to retain most of the cost advantage that comes with it.
On the volume trends, how has the effect been, sir?
So volume, like we said, we saw a big shift of road to rail when it initially started, but after that it's been more gradual. But DFC is more of a operational benefit thing rather than a revenue benefit event for us. Just by DFC being present apart from road to rail shift, there won't be any other incremental volume coming because of it.
Just to add to that, I mean, what happens with DFC is that our transit times improve. Like you said, it improves our supply side. So the same volume to handle which we're handling right now, we would have needed more trains if the DFC wasn't there. And we are able to maintain our costs. We are able to use our network and our spoke. So with that, we are able to be more competitive in the market and attract volumes. That's how we can get volumes using the DFC.
Got it. Thanks a lot.
Thank you very much. Ladies and gentlemen, that was the last question for today. Participants missed out due to time constraints. They can reach out to the management and SGA for Gateway District Parks or Churchgate Partners for Snowman Logistics. With that, we conclude this conference. Thank you for joining us. You may now disconnect.